Alrighty. Okay, so we finished off with question 1. Then we get to question 2. And question 2, yeah, thank you for that. Question 2 is pretty much your bank record. Okay. Now, guys, to be honest with you, I don't even think we should go through this one, because now bank record, we should be fairly comfortable with it. We will though try and browse through the answers. But again, bank recon, the same way I taught you guys in 1A with the journals, is how you should approach bank recon. First things first, let's find out what they want. So here, record any differences identified in the bank reconciliation process in supplementary cash flow receipts and payments with columns for details and amounts. And begin with the totals before any amendments. Okay, so basically begin with your provisional totals. They give us within the question, and then open, post, and balance the bank account in the general ledger. Okay, so this is your whole bank record process, and then compile the bank reconciliation statement as at 31 July 2017. All right, so basically, how did we approach things in the journals and in the bank record as we have done this semester? Literally, we go through each and every one of these additional pieces of information and we say, what is this going to affect? When we now know what it's going to affect, after we've gone through each of them, we then say, okay, now let me begin with my cash receipts journal. Then let me go to my cash payments journal. Then let me go and do the bank account. Get my balance on my bank account. Now I know the balance that I should get at the end of my bank reconciliation. And if I get the same thing, I've definitely done my question correctly. Now, if you do not get the exact answer, it's not the end of the world. Most of the marks are within correctly doing the relevant adjustments. Okay? So do not let that trip you up. Okay? Right. So credit balance per the bank account in the general ledger. Okay, so this is letting you know we have a negative opening balance in our bank account. Next one, provisional totals in the cash book. All right, as at 31 July. So here we have the cash receipts journal or cash book receipts. There's our provisional total. Cash book payments, there's our provisional total. Then we go down to 3, and if you guys have your question paper, you will be writing this down so that when you practice, it's a thing of just plugging in the amount. Okay, so 3, all items appearing in the bank reconciliation statement at 30 June appeared in the July bank statement except, okay, so these things are in the bank record. So in other words, they made the necessary adjustments that we gave them for June. This is, we're doing this for July, but they did not do the adjustments here. These two that they mentioned. Okay, so fine. Check number C744, dated 20 January 2017. Okay, this check now stale and should be reversed. How do we reverse a stale check? Okay, what does a stale check affect? Yes, it's going to ultimately affect the bank, but before we get to the bank, okay? No. When I write her a check, it's because of services that she's provided or a product that she sold to the business. So I've written her a check, but for some reason, because remember we're in July, she has not cashed that check from January. So when I wrote her the check, it went off my cash payments journal. So if I'm reversing it, where is it supposed to go? Cash receipts. So you're taking that 1,300 and you're going to add that to, so there you're going to put next to it CRJ. Okay. Next one, check number C1030, dated 29 June 2017. Payee. Okay. What are we going to do with that? 29 June. What are we going to do with that? It should go to the CPJ, all right? And we'll see if there's any other additional information in relation to that as we go along, because we have learned that sometimes you find some other additional information as we go along. Yes. Oh, yeah. Actually, it should actually go in the bank record, yes, because they have not included it in the bank statement. So in other words, they have not recorded that this money has been paid off. But on our side, we probably will have recorded it because we put it in the previous bank record. Does that make sense? Okay. And if you look at the date, it's 29 June. So that's towards the end of the month, so they might have just missed it. Okay. So yeah, sorry. But again, we'll see if there's any other additional information as we go along. Now, items appearing in the cash book, all right, but not in the July bank statement. Okay, so we've got two deposits. That means people have put appearing in the cash book. That means we've received money, all right, but for some reason the bank hasn't yet recorded this in July. So it needs to go to the bank record. All these items actually need to go to the bank record. But that's money coming in, the first two. The next two, these are checks. In other words, we've made payments, but the bank statement hasn't reflected those payments. So again, it's going to the bank record. Because we know any error or amendment that the bank needs to do happens in the bank reconciliation. Okay, so that's those there. Okay, then we go to the fifth one. Items appearing in the July bank statement, but not in the cash book. So the fact that it's in the bank statement, but it's not in our books, you know that already. These are things that need to be amended in our books. The question is, which one of our books? Is it going to be the cash receipts or the cash payments? Okay. At this stage, I'm sure this is not an issue because you guys have done several questions. Okay. So first one, a direct deposit on 7 July from a debtor. Direct deposit, that's money coming in. Okay. And we don't know about it because it went straight into the bank account. And we weren't made aware. They didn't send us an EF proof of payment. A dividend from directly deposited to the bank, same thing. Monthly fees. This is money now leaving us. So this should be cash payment. Interest on overdraft, cash payment. A debit order in favor of sharp response for business armed response. So this is property security, cash payments journal. A debit order in favor of insurance SA for the business insurance, cash payments. Okay? Right, next. 6. Hey. This paper was low. Also appearing on the July bank statement, check number QPR999, which was incorrectly debited to the business's bank account. So it was not supposed to go out. So this needs to be rectified in the bank record. The check is for one of the bank's other clients. Okay, that's just more additional information. So that's going to the bank record. That's money we should receive. A check received from a debtor, Mr. Cooper, was returned by the bank mark return to drawer. Okay, so a debtor came and paid us, the check bounced, we need to reverse that. When someone is paying us, we record in the CRJ. Now we need to reverse that. Where are we going to record it? Aha, CPJ. Okay. Number 8, the check C1034 issued during July was entered in the cash payments as 2,475 and on the bank statement as 475. The error must still be corrected. The amount per the cash payments journal is the correct amount. So in other words, we recorded it correctly, the bank did not record it correctly. Now fortunately, we can quickly do this calculation in our minds. The difference between these two amounts is 2,000. Okay, so what are we going to do with that 2,000? We're going to put it in the bank record, all right? And it's going to be a negative amount. It's reducing what we should have, okay? Right, because this was a payment. Then we go on, number 9. Check number 1036 was erroneously debited twice. So we need to look for check number 1036. Do we have check number 36? Where's check number 36? Hey, bud. Or maybe it's in the bank statement. Do we have a bank statement? No, I don't think we have a bank statement. So on the bank statement, oh, there's the amount. They've given us the amount there, 493. So if it was debited twice, that means we need to credit it once. So again, this is an error on the bank side, so this should be rectified in the bank recall. Okay, that's going to be a positive amount. The deposits corresponding with per the cash receipt was credited on the bank statement at the correct amount of 29,501. So basically, we recorded it wrongly. So we should have received 29,000. So in other words, but we only recorded 28. So we need to, in our books, in the cash receipts journal, record an additional 1,000. Can you see the difference between those two? It's 1,000. Is your hand up? No question? So that's obviously CRJ. Last one. Debit, unfavorable balance per the bank statement. Okay, so here they're basically letting us know. Remember, we still need to do the bank reconciliation statement. What's the first line that you have there in the bank reconciliation statement? Balance as per bank statement. That's where we're going to use that 93,187. Okay. So that was your question 2. So you see now you just throw in the adjustments where they should go. I'm just going to show our suggested answers. But they should. So there you go. You see we put in the total before amendments. You can call it total before amendments or you can call it provisional total. Okay. All right. Okay, we didn't finish everything. Okay. There's your what I was telling you guys. And there you can see we even put brackets on it, which is correct because remember, if you say it was a credit balance, it was a debit balance here. So debit balance is negative according to the bank statement. Because remember, they're looking at us as a liability. Okay, so that's an unfavorable balance. Okay. All right, and there you can see. And then again, we didn't manage to get to the whether we had a whether our bank balance matched our balance from at the end of the bank reconciliation. Okay, so let's jump into the next bit here. I'm trying to see where do I view. Why is this doing this? Close. Let's close this. Let's close this for a second. I want to rotate anti or counterclockwise. Coin. All right. Let's close this as well. There we go. So question number 3. Let's see what question number 3 was all about. Let's see what question number 3 was all about. So bank recon, I'm getting all my marks, ne? We're clobbering it, huh? No problems there. Okay, so here. Not at the required. Let's scroll down a little bit more. All right, so here, guys, this is very, very long. So I'm not going to be able to go through everything, but I'm going to discuss the approach. That's fine, because I want us to try and get through as much as we can. Maybe we'll come back if we have extra time. We'll see. But what do they want from us? They say make the necessary corrections and prepare a correct creditors control account on for June 2017, properly adjusted and balanced. Okay. So here, I'm hoping from 1A we still remember what the creditors control should look like. In fact, guys, trust me, debtors control, creditors control, you must know. Somewhere, there's a good chance you can get that. So make sure that you know what am I debiting, what am I crediting, how should my debtors and creditors control look like. Okay? What is the details and the details Some of you guys, you know the amounts. This should decrease, this should increase. Great. But also there's a mark on each of the line items there are the details. And people tend to make a mess of that sometimes. So that's the first bit. Second bit, make the necessary entries to the creditors list and balance or total the list at the end of June 2017. So all calculations as marks may be awarded to these. By now, guys, you should know this, that you need to make sure. And then here they give us a hint. You need to make sure that you show me calculations. Okay? Because if I can see you have the logic, you may have messed up with the figures, at least I can give you something, all right? Provided they're netted marks. Hint, remember, when you are done, the creditors control closing balance must be equal to the adjusted total on the creditors list. So here what we're doing is your creditors reconciliation. Okay? Right, we're doing the creditors reconciliation. So please make sure that you can do both debtors and creditors reconciliation. Okay. Right, and then here is the same thing like how we approach the debtors control. Right, they've given us last month. Is this last month? Because we need to do it for July, isn't it? No, for the end of June. Oh, what they did here, sorry, I lied. Let's actually just look at. They gave us the creditors control for 30 June, but it was a mess. Okay? There was errors to it. So what you need to do was to take that creditors control and rectify it. Okay? So I was just here doing some corrections, okay, to the student who I was working with. Okay, so purchases was where it's supposed to be. Purchase returns, however, should be this side, because remember what's happening? Purchase returns, it's reducing what we owe, because we've returned stuff that we bought on credit. Okay? Right. Okay, so anyway, if I start talking about this, it won't end. Okay? But again, just make sure that you are aware of what needs to go away. And then obviously here, remember we also needed to do the creditors list. Let's rotate this clockwise. Okay, right. So we had the previous balances. Okay, fortunately for you, they plugged them in for you. You then now need to say, is this increasing or decreasing? So like 180 is actually going to be a plus 180. Okay, you'll see these amounts or understand them as you go through this question on your own. Okay, so and then they were adding, and then you get your new adjusted total. Okay, the total you get here must be the balance. Let me do this for my online peoples. The total you get here should be equal the balance that you get on your creditors control. Okay, right. And that was question 3. So what is the challenging bit about question 3? It's being able to read through, and let me show it, being able to read through all the information that they've given you here, right? And then interpreting, what does that affect? And then making the necessary adjustment. Is going to be a plus, is going to be a minus, is it going to only affect the creditors control, or is it going to affect both the creditors control and the creditors list? Okay, that's what we really need to do here. Okay, so that was question 3. Question 4, remember I said question 5, ignore that, it's no longer in your syllabus. So question 5, what's going on there? Here I think, if I'm not mistaken, here we are working on your learning unit 4 with your adjustments. So here they say, prepare a statement of profit and loss and other comprehensive income for the year ended 30 June 2017. Note, notes are not required. Show all the workings on the face of the statement. Okay, ignore that. And then we see ignore that. Be happy. Let's work for you. Okay. But based on what we did in 1A, if they ever do say, you should be fine. Okay. I'm seeing now, as we in previous years, they used to actually do stuff on that, but these days they constantly say ignore that. Prepare the statement of changes in equity for the year ended 30 June. Okay, we know the formula for this now. So this should be. So, but here we're doing something for a CC. So this is actually slightly different. But we have done this exercise. Okay, so this is see the structure. Okay, so this is for a CC. Okay, right. Fine, we know exactly what we need to do. Not a problem. So here's your statement of financial position. Oh, we didn't actually do this. Okay, but we know generally revenue, we start with revenue, less your cost of sales. Okay, if we have any adjustments there, we probably did with all the space they gave. Gross profit, okay, other income, then you have your gross income, then less your distribution, in other words, general expenses, okay, and then finally your profit before financial costs. There you can see interest, and then profit before tax, income tax expense, and then your total profit. Okay, so again, the job here is to go through each of these lines, and I think we can do that. Let's see. We have 20 minutes until the end of the session, so let's at least do that. We'll just discuss them. Okay, and so there, provide for depreciation as follows: on furniture and fittings, 42,100. So they've actually given it. So if you already have a depreciation amount, you're adding that to depreciation, and then accumulated depreciation, we're also adding that. But accumulated depreciation is not in your income statement. So I'm just making you aware. Remember, for every transaction, we have at least two accounts that are affected. So I'm giving you both. So because the question you might get might be balance sheet and, okay, right. Rent income for July 2017 has been received already. For July, remember we're doing this for June. So we need to figure out whatever amount of rent was accounted for July and then remove it. Rent is a fixed monthly amount and did not increase during the year. So basically we've got rent for 13 months. So we need to look at our rent income. Is it rent income or rent expense? It's rent income. Yes, rent income. So we take that 42, where is it? The 42, 120, we divide it by 13. So we know how much we're getting every month, and then we say we minus it in the income statement. We reduce it by whatever amount we managed to get when we said divided by 13. Then we go to number 3. Number 3, settlement discount received. Okay, 1,242 was accidentally posted to the credit losses recovered account. The error still needs to be corrected. Okay, so how do we rectify this? Here we're accounting for an error. How do we rectify that? Thank you. How do we fix it? Yes. Yes. Yeah, we would deduct that from the creditors control. Well, they just said that it was affected the credit losses account. So credit losses recovered is an income, isn't it? So we would then debit that to reduce the credit losses. Okay. But again, remember, here we're in the income statement. So credit losses recovered is going to fall under your credit losses recovered. It's an income. Credit losses, yes, is an expense. So credit losses recovered is going to fall under other income. So you're going to say credit losses, whatever the balance on credit losses is, in brackets, minus it. Okay? So then you have a small amount. Then we're going to place this under, what is this thing supposed to be again? It says there in the question. Settlement discount received. Yep. So then settlement discount received is also an other income. So they were going to then say, whatever settlement discount, if we have a balance for settlement discount, okay, we're then going to add that 1,000 whatever amount to it. Make sense? Okay, we only were doing the income statement, so there's nothing else, I think. Yeah, there's nothing else that we would need to do there. Okay, are we going to get through all of these? All right. Okay, so what was the next thing? We're now on 4. A debtor who owed 6,600 has been declared insolvent. The business received 25 cents in the rand from the insolvent estate. This transaction must still be recorded. Write the rest of the debt off as irrecoverable. So you're going to calculate 25% of this 6,600. We're going to say credit losses increases by that 25%. We're also then going to say debtors is decreasing. Okay, debtors is not going to be in your income statement because we know debtors is a current asset. Okay, but again, in case you've got a question that says balance sheet, then you know what to do. Or if they make you do things in the notes, then you know what to do. Okay, that's the 75%. I'm sorry, the 25%. No, the 25% is bank, sorry, and debtors control. Are you saying the same thing? I'm not hearing you 100%. We're saying the same thing. Okay. Right, so it's bank, the 25%, because that we have received. It's going to be bank and your debtors control decreasing. Bank, we're receiving cash. Okay. Then the 75% credit losses and your debtors is also going to be affected. Debtors is decreasing still because we haven't received that money. And then your credit losses is increasing. Okay. All right. Number 5. We're almost there, guys. We're almost there. Adjust the allowance for credit losses to the amount of 2,592. We saw this earlier where they asked us to create it. And you see now. So here they said adjust. Let's see if there's already an existing credit losses. All right. So there we already have an existing credit losses, and that's 1,944. So now we are adjusting this upwards. Can you see that? So what you're going to do, this is obviously going to affect allowance for credit losses and allowance for credit losses adjustment. Okay. So since we're adjusting this upwards, allowance for credit losses adjustment is obviously then an expense. And that's what's going to affect your income statement. So you're going to go allowance for credit losses adjustment under your expenses. You're then going to say the 2,592 minus the 1,000 and something, 900 and something, to find out, okay, what's the difference? Okay. Then you're going to plug that in there on the expense, under the expenses. Then you're not doing this here, but in your balance sheet and in your notes, all right? Or in other words, your net debtors. Remember, net debtors, you have your debtors, then your allowance for credit losses, and then you have your net debtors. So your allowance for credit losses is then going to be that. You're going to adjust it from 1,900 and something, and you're going to say then plus whatever that difference was, so you can get it to 2,592. Okay, just throwing that in there as well. Then we go to the next one. Stock take revealed the following items on hand. Inventory, 107,000. Okay. So what was our inventory? Into our books. Trading inventory, 111,888. There's a discrepancy. What accounts are going to be affected as a result? Nope. There's less now. There's less. We had in our books 111,000. Here they're telling us that when we do a stock take, we have 107. Cost of sales and trading inventory. Okay, so cost of sales is increasing by whatever that difference is between the 111 and 107,000. Trading inventory in the balance sheet or in the inventory section on the notes is decreasing by that amount. Happiness. Okay, super. Then 7. An additional 68,400 of net profit must be distributed to the members in the ratio of their interest in the CC, namely 60% and then 40%. Okay. An additional must be distributed, and then taxation for the year end. Okay. So I think that should be just a deduction. Yeah, that's supposed to be a deduction. So remember, you are doing the income statement. So here, you're then supposed to calculate the deduction here. Yeah, I believe that should be the case. Sorry. Right, so that's going to reduce your net profit there. And then taxation for the year ended amounted to that. So that also you're going to throw it in. It's going to reduce whatever balance, whatever net profit, assuming we make a net profit. And then what else? So that was the first part, 28 marks. Easy peasy, 3 marks. And then prepare the statement of changes in equity. Okay, we spoke to this already. You need to go and look at the capital balances for the respective partners. Okay, you need to go and check the current accounts, all that other stuff. Okay, but guys, please refer to, I think the first exercise we did in partnerships. Is this partnerships? This is a CC or is it a partnership? This is a CC. Okay, so just refer to how we dealt with that there in CCs, what your statement of changes in equity looks like, and then plug and play. It's straightforward. Okay, remember question 5, it's not applicable. We did not do these this semester because this was removed from the syllabus, I think 2 years ago. Yes, so don't worry about question 5. Okay. Realization. I remember this was actually fun. It was easy if you understood what needed to be done. So guys, I will upload this today when I sit